Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, October 11th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. You're going to see that the futures are trading down by about 1 point, 3/4 of a point. Not really that big of a deal. They were down 2 points just a few minutes ago, but again, big move yesterday in the market. You could see the soaring and roaring pop. Tremendous move in the futures. The S&P finished up 36 points yesterday. That's just a tremendous move, all on the back of potential resolution by the politicians in Washington. Are they going to raise the debt ceiling? Are they going to open the government up again? That's the big question. I think more importantly than anything is the debt ceiling debate. Of course they're going to raise the debt ceiling. That's what they do. Market falls enough, the politicians get scared, and they strike a deal. That's how it works. Their money's in the market as well. So that's how they do things. Once the market frightens them enough, they'll come to some kind of a deal, and we'll see if that happens. No deal has been reached yet, but it looks like either way, if there's not a deal reached, they're going to kick the can down the table, and they're going to do a temporary debt ceiling increase, and the market's rejoicing over that. So we'll have to take it as it comes. Last night in Asia, the markets all soared higher on that news. The Nikkei 225 was up 1.5%. Shanghai was up 1.7%. India was up 1.25%. Singapore was up 0.3%. Not a great move there. And the Hang Seng, which is Hong Kong, that was up 1.16%. So all in all, Asia holding up very well. Europe is pretty much flat across the board today, with the exception of the London FTSE 100. The London FTSE 100 is up about 0.6%. Remember, they can print their own money. They're really separate from the European Union, but nonetheless, they can print their own money. The rest of Europe is flat, but Europe soared higher yesterday, so we have to take that into consideration. But all the markets around the world are rejoicing over the potential of a debt ceiling being lifted. I'm not necessarily saying it's a good thing or a bad thing. I'm just going to leave it alone. I'm just going to trade the markets. Looking over at a few different stocks today, you want to watch JP Morgan. JP Morgan made a move initially up to 54. If you were an In the Money Stocks member, you know 54 was the level that JP Morgan could not get through. We talked about that yesterday before earnings, and sure enough, it got right up to $54 and boom, turned right back down. I do not see the stock getting above 54. It looks like the company, Jamie Dimon, who is the CEO, looks like he took his first quarterly loss in over a decade, and he also had to take a $7 billion charge because of legal expenses. CNBC just reported that he's putting away $23 billion for legal expenses and fees and different problems stemming from legal problems, illegal issues. But that's pretty remarkable when you think about it. So, in my opinion, the stock does not have any more upside past 54. We really don't care about the news, but I just thought it was pretty important to just share that. That's a big charge to write down $7.2 billion in legal expenses. Looking at Wells Fargo today, they reported earnings before the opening bell too. I wouldn't do anything with Wells Fargo. It has got a little bit of a spike. It closed yesterday at $41.44. The stock is trading now around $40.71. Around $39, or appears of $39 by about 5 or 10 cents. That's where the stock will have intraday support. Other than that, I don't really see a lot here for Wells Fargo. And the chart does not look so pretty. Got some lower highs. Not a pretty chart at all. Intraday, it will have support just below the $39 level. So keep that on the radar. That's what I'm seeing as far as support goes. Now, some other big things that are taking place in this market this morning before the opening bell. One, we have a nice little drop in oil. Oil is down about $1.42 today. Right now, light sweet crude is trading at $101.57. So let's take a look at the USO and we'll see how that's reacting. And that's trading around 36.67. It closed at 37.10. So a fairly decent drop ahead of the opening bell. Oil still has a lot of support around it, or I should say the USO, a lot of support around this level. So it's going to need to really go down a little bit more before it can really crack. But decent little fall before the opening bell. Now, one equity or one commodity that is getting hammered is gold. Gold is down over $30 today. It was down about as much as $35 before bouncing up. But take a look at the GLD today. This is a pretty good hammering before the opening bell. Now, the GLD does have a little bit of support around 121.75. So keep that on your radar. But if it breaks through there, not a pretty picture. Gold is getting hammered to the downside before the opening bell. But there is some minor support I'm seeing around 121.75 for the GLD. Gold futures at the moment are trading down to around $12.67 an ounce. So gold is getting pounded to the downside today. You just have to take it for what it is. Right now, gold is still under distribution, and we'll see if it can hold these levels. If it can hold these levels, gold could be something to trade for the future to the upside. But right now, it is getting bombarded, and you got to be a little bit careful. But I'm showing some support around 121.75, and that is on the GLD. Okay, so I'm going to leave it here. It's a Friday. Fridays we normally look for a flat trading day, sometimes positive, but we were up quite a bit yesterday, so to see a minor little retrace today would not be a shocker. But generally it's a flat to slightly positive day on a Friday. But yesterday we had such a big move up. The next day is generally a pause day, so we're just going to look for a flat day today. With that said, everybody, I wish you all a great trading day, and we'll see you on the charts.